According to recent data, 90% of people that purchase properties require some sort of financing to do so. So unless you're part of that 10% that doesn't, then you'll probably be calling a mortgage agent sometime in the near future for a loan. But if you're Muslim, then you know that mortgages are haram. So in that case, what do? Do you just rent forever? Do you just put yourself in a situation where you try to save up as much money as possible to be among that 10% that's gonna buy a property in cash? Well, one solution that has come up in recent time is what's called a halal mortgage. These are mortgage products that are marketed and presented as though they are Sharia compliant. But are they really? To be fair, I don't want to make any broad statements and say that all of them are categorized as either yes or no. But what I will try to do today is try to paint for you guys a picture of how these halal procedures are meant to go, and you could use that as a barometer to judge for yourselves. Personally speaking, from my research that I've done into these various companies, a lot of them are garbage. A lot of them are not Sharia compliant. Now, to be fair, I did come across one or two options that were good, but the vast majority of the options that are available in the market today are not. And what makes it worse, in my opinion, is that they're using the guise of being Sharia compliant or a halal mortgage to justify charging higher interest rates, higher fees, and basically make more money in their pockets, while not actually being halal or Sharia compliant at all. And ultimately, the only person who benefits from it is them, as the lender. You as the borrower don't benefit anything from it. So today I wanted to talk about a few things for you to consider if you are looking to take on a halal mortgage. These are going to be some considerations that you should have, some questions that you should be asking, and some things to think about if you're in that process. So there are two main structures of halal mortgages. There's the murabaha agreement and the musharaka agreement. The murabaha agreement is a process where the lender buys the property on your behalf and then essentially sells it back to you at a marked up price. And the other structure of halal mortgage that's often used is the musharaka agreement. The musharaka agreement is basically a partnership that the borrower takes on with the lender in order to purchase a real estate property. Both of these structures have specific requirements in order to actually be Sharia compliant. So unless these steps are followed to the T, then they're more likely not Sharia compliant. Today, I'm not gonna go into the specifics of both of these structures. However, I will give you guys some general guidelines, some general things to look out for to know whether or not you're actually getting a Sharia compliant product. And the specifics of the musharaka and the murabaha, we can discuss at a later video. The first thing that you must consider with a halal mortgage is that the loan must be open, meaning you should be able to pay it off in full without any sort of penalty being charged to you, nor should you be restricted in how much you can pay down the mortgage or your ability in general to be able to pay off the mortgage. In Islam, loans are always open, meaning as soon as you want to pay them off, you should have every ability to pay off the loan in full without being penalized for that. Secondly, the liability must not fall on one person, meaning the lender must not take all the risk, but neither should the borrower. Now, while we discuss liability being shared, reward must also be shared. One partner cannot gain all the rewards while the other partner does not gain the rewards, meaning the rewards must be shared and the liability must also be shared. Thirdly, an exchange or profit generated on an agreement must be done so on the basis of a commodity. Money itself is not regarded as a commodity in Islamic finance. It's looked at as a medium of exchange, meaning you cannot make money off of your money. So in the event that you are taking on a halal mortgage, it must be on the basis of a tangible asset. In other words, it must be on the basis of a property that's actually worth something. The fourth thing is agreements must be clear, they must be concise, and they must be able to hold up in court. They must be legitimate documents, legitimate agreements that are discussed. And in these agreements, there must be no ambiguity among partners, meaning all the details of the contract must be fully and clearly laid out between both partners. The fifth thing is that the price must be set from the beginning, meaning the entire price, including the quote-unquote cost of borrowing. It must be determined and established from the very beginning of the contract, and it must not be subject to any sort of change or reevaluation or fees that get tacked on at a later time. Every cost that is associated with the transaction or the agreement that you're taking on must be specified at the very beginning of the contract. and it must be honored throughout the full duration of that agreement. So these are just some general guidelines to keep in mind regarding halal mortgages, and you should definitely keep them in consideration when looking at potential halal mortgage options. If you do have any specific questions about your scenario, feel free to shoot me off an email. My email will be linked in the description box below, and I would be more than happy to set up a call to discuss this further at a later time.